Nigeria's annual inflation rate was down to 23.71% in April 2025 from 24.23% in the prior month. Food inflation, the largest component of the inflation basket, remained elevated but moderated to 21.26% from 21.79% in March. What is also notable is that month-on-month inflation fell from 3.9% in March to 1.86% in April, more than a 50% decline in month-on-month inflation. On the other hand, analysts noted that in Benue State of Nigeria, food inflation hits 51.8% year-on-year as insecurity still disrupts farming activities. We have a senior economist, Opeyemi Agbaje, to help us unpack the implications. Hello and welcome to Global Business Insights, where we look closer at headlines moving markets to equip viewers with perspectives on the peculiar business environment. Inflation can be a real source of citizen pain, especially in countries with high poverty levels, weak social safety nets, and where access to affordable credit is severely limited. If there is high demand for essential goods beyond what is supplied, buyers are willing to pay higher for such goods, and suppliers are tempted to raise the price until we get a demand and supply equilibrium. Banks raise interest rates in economies which are sensitive to bank borrowing rates. That's the central banks. Mind you, in developing economies, access to credit is much more limited, and so hiking rates by the apex bank is not as effective. But reducing money supply and other restrictive policies can curb demand and help to bring prices down over a period of time that differs depending on the economic characteristics of the country that we're talking about. Also, if the inputs into supply, such as energy costs, which feeds into transportation of, say, food, goes up, or if there are bottlenecks in the supply chain due to, say, insecurity, this makes costs of goods higher. Suppliers can either accept an erosion in profitability, but where goods are essential, suppliers are likely to simply raise prices. To address this type of inflation, therefore, requires more supply-side reform to debottleneck the value chain and bring down cost of inputs to essential items, or expand importation opportunities to improve supply volumes as a cushion for any supply-related pressure on prices. It's worth adding that hiking interest rates are not effective when inflation is supply-driven, which, like I said, is due to rising prices of raw materials, inputs, higher wages, government regulations, taxes passed on to customers, and supply disruptions. For demand pull inflation, which tends to be driven by strong consumer spending and confidence, expansionary monetary policy, and government spending, this is where restrictive monetary policy, which has to be coordinated with tighter fiscal discipline, comes in. Applying the appropriate interventions to address the causes of inflation is therefore key to be able to get inflation under control. But as the Central Bank of Nigeria Monetary Policy Committee meets next week at a time of much pressure to drop high rates, which all agree is holding back economic growth momentum, the CBN committee will want to ensure it does not ease in a way that sacrifices the gains made in fighting inflation. It will also note the lag in seeing the impact of previous rate hikes and interpret the latest data from that perspective. Opeyemi Agbaje is Chief Executive of RTC Advisory Services Ltd, and he comments on how the inflation read could impact the Central Bank Monetary Policy Committee when they meet on Monday.
They just released inflation figures show that the CPI went down to 23.71 from 24.23% the previous month. This is good news. This is more in accordance with our expectations post GDP rebasing. We expected that after the debasing, the direction of inflation will be downwards. But we saw an uptick to 24.23% last month. So it's a good thing that we've returned to a downward direction in inflation. Hopefully that can be sustained and inflation may then continue to decline. It's one of the critical monetary policy imperatives of policy right now to reduce inflation, reduce the burden on the Nigerian populace and on businesses from having to deal with higher costs of living and higher cost of production for the producers. The immediate question will be, what will be the implication of this for policy, for in terms of the next monetary policy committee meeting at the central bank? The obvious expectation will be for the CBN Monetary Policy Committee to signal a downward direction in interest rates. Remember that now the rates are down to around 23.7, let's say 24%. The MPC has kept rates above 27 at the anchor rate, the monetary policy rate. At that level, you can justify a 3-2, but at least a direction, a signaling of a downward direction in interest rate, no matter how modest. I expect the CBN monetary policy's first downward direction in interest rates to be modest. It's more the signaling about direction. Perhaps the monetary policy committee would want a more consistent and perhaps bigger reduction in inflation before an aggressive reduction in the monetary policy rate. But at least we expect some signaling in a downward direction. There's a lot of political pressure for lower interest rates. There's a lot of socio-economic pressure for lower interest rates. And therefore, we would expect, and of course, the case for lower interest rates from a purely technical point of view, with inflation at 3.7, you can justify reducing the MPR from 27.75 or whatever. So my expectation will be that interest rates will incline slightly downwards at the MPC, and then we would watch the direction in subsequent months of inflation and then continue a consistent. As long as inflation continues to decline, we should expect the consistent lowering of interest rates. That will be my expectation.
Now to other business stories. Retail sales in the United States rose by 0.1% in April to $724.1 billion after a 1.5% increase in March, and also slightly better than the market expectation for a no change. On a yearly basis, retail sales were up 5.2%. For Walmart, first quarter 2025 revenue rose 2.5% year over year to $165.6 billion, roughly in line with consensus estimates. U.S. same-store sales were up 4.5% from a year ago. That's better than projections for a 3.9% increase. Earnings of 61 cents a share topped analyst expectations for 58 cents. Walmart posted strong first quarter and reiterated guidance for the year, also warning of substantial uncertainty and higher import costs, which will inevitably result in higher consumer prices in coming months. We have been following the U.S.-Middle East ongoing business meetings, and why has the Middle East become so compelling? First, indeed, it is about money. 2025 GDP per capita in purchasing power parity terms for Qatar was $118,760. For UAE, GDP per capita is $82,000, and both are higher than US GDP per capita of $74,500 and Germany's $64,000. If you look at Africa, 2025 Q1, Egypt GDP per capita, also on purchasing power parity terms, is $21,688. South Africa GDP per capita, 14,000. Nigeria's GDP per capita, that's the latest data, $6,790. The global average is about $22,000. Wealth, which of course is an indicator of ability to invest in research and development, consumer appetite to buy, and investments in infrastructure, new technology. These are all things that come easier where countries have the fiscal ballast to do so. Other factors like business competitiveness and ease of doing business should also come in. Qatar is third in terms of global rankings if you look at GDP per capita, behind Luxembourg and Singapore. So we can understand the win-win for the United States. The case to do a deal in Africa, between Africa and the US, is not as clear, and I expect will be more focused and targeted at where the US sees an opportunity. I still see Nigeria as a dark horse, despite the low GDP per capita, with a high potential to grow and strong positioning to achieve unexpected economic breakthrough. So let's not rule out a US-Nigeria partnership, given the strategic role Nigeria is seen as playing in the African Renaissance. Also, at Qatar, Trump has hit out at Apple's plans to produce more iPhones in India as a way of avoiding US tariffs on Chinese-made goods, as he continues to push the tech group to manufacture its best-selling device in America. Speaking in Qatar on the latest leg of his Middle East tour, the US president said he had a little problem with Tim Cook. Apple has not commented. And talking of big business meetings, the focus shifts to Europe, London, where leaders are currently preparing for the EU-UK Business Summit next week, and where analysts are warning that UK and Europe must prioritize economic prosperity over politics. For the first time, the CBI, that's Confederation of Business Industry, UK's leading business voice, and Business Europe, representing over 40 European federations, will come together to publicly outline the business priorities for a refreshed EU-UK strategic partnership. This meeting could reset post-Brexit relations between the UK and EU, focusing on cooperation in areas like trade, security, foreign policy, with talks including a potential agreement to enhance cooperation on defense funding, industrial planning, and geopolitical strategy. Also, there could be talks on reducing border checks on agricultural products, mutual recognition of professional qualifications, and other trade-related issues, as well as discussions on fishing rights in UK waters. That's a long-standing point of contention between the UK and EU. More business stories. Yesterday, the U.S. Bureau of Labor Statistics reported that producer price inflation cooled down. It came in at a slower pace of 2.4% year on year, compared to estimates of 2.5% and the March reading of 2.7%. Also in the US, we saw Wall Street mixed, with the tech-heavy Nasdaq Composite falling for the first time in more than a week as the technology stocks rally stalled. Japan's economy shrank for the first time in a year in the March quarter at a faster pace than expected. Gross domestic product contracted and annualized 0.7% in January to March, much bigger than forecast for a 0.2% drop. Asian markets were mostly lower as markets continue to monitor US-China trade developments and digest the release of macroeconomic data. Well, that's it on this edition of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.